Welcome to Ticker Talk. I'm Ted Ohashi, coming to you today from the offices of InvestmentPitch in Vancouver, British Columbia. I'm pleased to have with me today David Morgan, founder of themorganreport.com, an acknowledged expert on silver. With David is Scott Drever, president of SilverCrest Mines. Welcome, gentlemen.
Thank you, Ted.
David, let's start by talking a little bit about the price of silver. What do you see going on in the silver markets, and what do you expect over the next 12 months?
Okay, well, early 2013, I'm still bullish. I see silver going higher in 2013, but there's some overhead resistance technically. We've got some areas probably around the $35 level to break through, and that'll probably take a little bit of work. And then we were as high as 48 in April 2011. So to get back to that mark, again, there'll be people that have bought at the higher levels, like 38, 40, 42 as an example. And they have lost faith in the market. So some of these people, not all of them, will actually sell back into the market when silver makes that benchmark. And they'll be relieved that they broke even, they didn't lose any money. But once you get through that, what's called overhead supply, then the market is free to move. Now, there aren't that many people that bought between say 35 and 48, because if you look at a chart, it wasn't very long in duration. Having said all that, the fundamentals for silver have never been stronger, or for gold for that matter. And I really do think we're going to see probably minimal above 40 this year, and probably test the $48 level a couple times.
And what is it that drives all that activity?
Fundamentals haven't changed. I think it's the debasement of the currency on a global basis. The bankers have definitely assured us all that the QE 1, 2, 3 didn't work, so let's go QE 4, and now we regard it as QE to infinity. The printing press has never worked. You can't have a debt-based monetary system where debt's the problem and get out of it by creating more debt. Yet someone doesn't seem to get the message, and the main message that's not received is basically the bankers. They somehow or other either know it, and I think that they do, but the public is unaware of what's really going on, and they have faith in something that they shouldn't have faith in. A piece of paper that has no value behind it has never stood the test of time, ever.
You know, the one thing that surprises me is with all the quantitative easing around the world, I mean, just about every country participates in it now, that we haven't seen even more strength in the commodities, and particularly gold and silver.
It's a normalcy bias. It's that tomorrow's always going to be like today. And people just don't really want to think in those terms. They don't want to think in realistic terms. They want to look at the French Revolution and think it had something to do with food. It was a monetary crisis, what it is. Most of your big revolutions in history came about from a monetary crisis, not all of them. So people don't understand history. I think Santayana said the greatest lesson of history is that people don't learn the lessons of history. So people really understood the monetary system, what's really happening. They're stealing purchasing power from them basically daily, and yet you don't see it daily in the grocery store as an example, but over time I certainly do see it. And I think a lot of people sense the problem, but they don't understand or can't articulate it. And that's what people such as myself, Jay Taylor, a lot of the guests that you have on your show, Ted, try to convey to the public. The problem is it's within this very, very teeny community, and we're sort of outcasts at this certain point in time. But eventually, as things start to get worse, people start to broaden their scope and see programs like this and say, oh my gosh, that makes a lot of sense. Now I get it. I see what's happening. That will be the new buyers in the gold and silver market. And I think they're going to rush in a way that we probably never experienced before.
So David, clearly you're bullish on the commodity of silver. What about the silver stocks?
In a way, I'm more bullish. The reason being is that we're at a 30-year low relative to the bullion. In other words, the discrepancy between what you can buy an ounce of gold or silver for relative to what you can buy a stock index that's the mining shares, like the HUI or the XAU or the GDX or GDXJ, any of those, you're at a low that's an opportunity that only happens once a generation. Yet people are shunning these stocks and they don't want to buy them, and the volumes are low. And all the indicators that you would use as someone that objectively knows how to invest properly, you would use right now to buy these equities, especially well-chosen ones, and wait, be patient, because the market is going to go the other way. Instead of being severely undervalued, they'll become fair valued. And then at some point they'll become overvalued. So if you really understand markets, this is the time to not be afraid. This is the time to smile and get aggressive. Having said that, I'm very aware of the fact that a lot of people in this sector have been holding for a couple of years, or 3 or 5, and they're really disappointed. I would suggest to them that they continue to hold, and wait for this, the market action to correct and for the share prices to reflect really what the values are.
David, that's a nice segue into talking about common stocks. Of course, we're going to be talking about SilverCrest, a company that you know very well. Scott, why don't you start by telling us a little bit about SilverCrest and how you got to the point that you're at today?
Well, we're on the receiving end of a lot of the things that David has talked about, and I certainly concur with a lot of his comments. Our focus obviously is to provide the supply of silver and to a degree gold. So SilverCrest is in the production business. We have a mine in Mexico, and we're producing both gold and silver. And our cost structure right now is about $7.80 an ounce of silver equivalent. So we've been selling most of our silver this year for about $30 an ounce, plus or minus, depending on the day we go out. So we've got good margins in the production that we have, and I'm delighted to hear David say he thinks it's going to go much higher in that. And obviously at $35 or $40 or $50, we're making a lot of money. At these levels, we're probably cash flowing about $3.5 to $4 million a month. And we have an expansion program underway that will take that to double the current production that we have. So we're making the presumption, of course, that our cash flows will double along with those production increases. We really focus on the cost aspect, both from a CapEx point of view and an operating cost, because if we can control those, and a lot of the mining groups today are having difficulty controlling those things, if we can control those things, then obviously it's makes the whole operation a lot more profitable and gives good returns on shareholder capital.
So obviously you have a nice production facility, but you have expansion plans as well, don't you?
We certainly do. The mine itself, we're mining the Santa Elena deposit in Sonora State, and we've been at it for about 2 years now. But we have an expansion program underway. We haven't drilled or cut that resource off in any form or fashion. We have a report coming out in the next few weeks that'll upgrade all our inferred resources to reserves. And we think through that program we will be able to expand our mine life to 10 or 15 years once we have the conventional mill in place that's under construction now. So we have growth internally there. We're discovering more things around the mine and adjacent to the deposit itself that we think bode well for a long mine life there. In the pipeline, we have a project called La Joya, which is in Durango State. And we picked that up about 1.5 years, 2 years ago now. And last year, after a first round of drilling, we announced a resource of over 100 million ounces of silver equivalent. And we have since done another 90 holes, which we are incorporating into that geological model. And we will have those results out very shortly. And the ballpark numbers is that we can double that 100 million ounces. So we've got a very strong production unit. We've got near production increases available from that operation, and in the pipeline we have La Joya, which could develop into a very, very strong, profitable operation in a few years.
One of the other things that you have is a nice cash position. Cash is king these days, and as you mentioned, you're adding to that cash position every month.
Exactly. We at the end of the third quarter, we haven't got our final year-end results out yet, but at the end of the third quarter, we had $37 million in the treasury. During the fourth quarter, we did a $35 million bought deal, which added to that amount, obviously, and we're going through some large capital expenditures on this expansion program to put the mill in. We think we'll spend upwards of $65 million this year in that process. But that'll come back very quickly on the added production and hopefully the higher metal prices that David has alluded to.
So David, you mentioned earlier that you felt silver stocks were undervalued relative to the price of the metal. Would SilverCrest fall into that category?
Oh, absolutely. You said it early in the interview, SilverCrest fits our favorite model, and that is basically a producer that has exploration potential and is able to control their margins or narrow them. So let's face it, any business that's real is about profit. And there's nothing to be ashamed of making profit. That's really what free markets are all about. So Scott's company, SilverCrest, has been on our list for a very long time. It is undervalued. I think there's some bank analysts out there that are looking at $5 share price up to that limit or so. We've had a higher target on it. I don't like to give targets, but if you just do the models that we do, we talked about the workshop, what you find out is the stock is undervalued. So I think the stock has the potential, and I don't like to use the word stock too much. We're talking about a company here. And this company could probably double in value, I think, fairly easily. Reminds me of one that we had on the list some time ago that's still on there. That's really become one of the darlings of the market. It's moved all the way up to the New York Stock Exchange. But at the time, that stock was a $4 stock, and it was just going sideways and sideways and sideways, and they kept doing the right thing, increasing the amount of silver that they had in the ground. It's very tied to silver. It's one of the most correlated to silver because I think 90% of the company is based on silver, which is rare in the silver market. Regardless, the market finally caught on. That stock got up to about 24 or so. I'm not suggesting that SilverCrest is going to perform exactly like that other company that was on our list, but what I'm suggesting is that it certainly has a great deal of potential. And not to speak for Scott, but I like the way that they run their company. I like what they do. I like their attitude, and I like that they don't get overzealous on what they can accomplish. Basically, they meet their milestones. That's one of the things I used to do every year in the Morgan Report, was ask every company that we're interested in, what did you do last year? Did you meet your milestones, and what are they going to be for the following year? I gave up doing that. It just got to be too cumbersome a job, but regardless, this is a company that does what they say.
Scott, I heard you say that, that you and your management group are still significant shareholders of the company, and that motivates you to operate more as if you were shareholders than management. What did you mean by that?
I think between the principals and the board of directors, we still have about 8 or 9% of the fully diluted position, and because of that personal position, we look at ourselves as shareholders, and we act as prudent shareholders would under normal circumstances. So, and as David said, we try and perhaps under-promote a bit and over-deliver. And we really like to do what we say we're going to do. And we started out early on, we said we wanted to build a significant resource base. We wanted to get the cash flow as quickly as we could, and we wanted to grow the company. And you can look through our history, and I think that's exactly what we've done.
Well, I'd like to thank both of you for being with me today. And I hope that a year from now we'll be able to sit down and see which of the milestones that Scott's been able to accomplish with SilverCrest. And then we'll test David too and see whether silver prices really are $40 to $50 US. From the offices of InvestmentPitch, I'm Ted Ohashi.